CEOS still in its support validation phase. Let's go ahead and find out what could happen for the following session. What is up, you guys? Thank you so much for stopping by once again on this fine Saturday. This is ARCa coming at you with a CEOS technicals and raw price action thread of analysis. Before we get started, please make sure to subscribe to the channel, like the video, share the video with a friend so that you and them could consider joining our trading community in Discord called ARCab. With that said, let's go ahead and dive right into the charts. Okay, so we are looking at CEOS on the daily chart here, and let's go ahead and just pull up the drawings yet again. And this is the broadening descending wedge that we've been riding now. Okay, so I want to just go over it for the new viewers so that everybody is on the same page, right? So this broadening descending wedge usually presents an upside continuation upon its true breakout. Okay, now what I mean by true breakout is usually these breakouts are found upon test number 4 or test number 5. Okay, usually it's test number 4, but test number 5 is also a good count for us to make that upside continuation. Okay, so please do notice that we are on the daily chart here, and this can potentially take some time. Okay, so what is the what is the support line that we're looking for in the immediate short term? Well, as you can see right down on the last 2 days of candles, these candles, I mean the last 2 days of iterations, right? So these iterations have actually come back to validate our newly converted resistance from the wedge, of course, into now a support. And you can see that they're actually testing right at those levels. So everything is still looking pretty good. And we did mention the possibility of actually moving up to the 2.618, a less likely 3.618, but we actually fell really short of that, and we actually ended up only touching the very close to the 2.272. Okay, but we did find that support that we were talking about at the 1.618. So this is a key support level, and this is why I have this large trend line here, because it is an important level for us to consider within the trade. Okay, usually the 1.618 is considered the golden mean or the golden ratio. It's typically used in natural sciences and art forms, in the trade. So this is a ratio to keep our eyes on, okay, as the trade usually likes to take the trade to these levels, or its inverse brothers and sisters, okay, like the 2.618, 3 spot, the 4 spot, and the not 618 right down here. Okay, so in this particular case, we did find that bounce directly from our newly converted resistance into support, okay, which is yet again another bounce and a validation that it is a support level. Okay, so the reason why I started this video off saying that we're still within that validation phase is that, I mean, generally the sentiment, psychology behind this trade is still not yet convinced that we have officially found a good support. Another thing that's kind of leaving us in that limbo is for the fact that we do have a gap here, okay, particular to the daily chart. That gap, it kind of closed a little bit right here, but still, there's still an opening or a void between 0.198, which is 1 cent, okay, almost 2 cents. So 0.198 to the lowest part down here of about 0.190. Okay, so it's very small, but it's still a psychological component that we must keep in mind for the trade. Okay, so based on this price action and these large wicks like this, it shows that the bulls are still in a bit of control, and since we are closing slightly above the previous day candle, I can only suggest that we may actually see another upside move, but that upside move will likely be limited, if I can just be very discreet and very clear. Okay, so we do have some relevant supports near us. First of all, we do have the 7-day period exponential moving average right there, which is located at about 0.221, so just about 2 cents. Let's go ahead and just block this out and check out our simple moving averages. As you can see, the 10-day simple moving average was used as that support, and it was used right at it. Another factor, it was our SMA 100. Okay, so we can actually make this just a little bit brighter so that everyone can see what's what's really happening with this. We'll make it this color here so we can really make it bright. So you can see we found that resistance right at that SMA 100 before continuing on to the downside, finding that support at the SMA 10, which is a 10-day simple, and we actually made the upside move, okay? And then we found this support right at the 1.618, and we closed above, okay? So we did expect this type of move to happen regardless, okay? So now what I am saying is that we may face an upside again, very likely to find the resistance range between, well, actually, you know what, I can give you a bit of a range right now because it looks like it's going to be a little bit of a tighter space, okay? So it would be from the wick high of the daily candle from Friday, which is sorry, my glasses are not here. So 0260, right? So right at that 0260 could be that top side of the resistance alongside the SMA 100, right? So we're gonna just draw it from the SMA 100 at 0258, and we can draw right up to that 2.272 at about 266, 0266, okay? So that could be very likely an area of resistance for us to find in the next trading session, which is on Tuesday. Okay, you guys, so before finding a type of resistance here and then coming right back down and essentially starting this like limbo here, okay? So we may be trading the ranges for quite some time, because usually this price action does present just very sideways, very boring trading here, unless there is some type of psychological catalyst or some type of something to encourage the sentiment. Then this thing is actually likely to stay in kind of this limbo, okay? Now, let's go ahead and move on to the next chart, and that'll essentially give us that bias, okay? So if we, I guess I can go ahead and just mention this. This is the divergence chart. Divergence is the opposition of price action versus momentum, and in this case, momentum represented by this indicator RSI, Relative Strength Index. Okay, so we can see right now that we are facing a type of resistance. We're facing these drives of bearish divergence, several of them at that, right up here, and that actually started on January 11th. Okay, so we're still honoring that downside. I know we're getting a little bit of a pivot right here, and that pivot actually happened in respects to that bounce that we got from the SMA 10 on the previous chart, which was right over here. Finding that bounce from the SMA 10 to the upside actually kinked our 12-hour RSI to this manner here. Very weak upside pivot, okay? So we can't give it that much credit whatsoever, okay? As usually those things tend to be they tend to be momentary corrections, right? So a very important thing to notice here is that we do have the 14-day simple moving average still suggesting upside, and we are in the bull strength percentile, okay? So I'm just going to go ahead and pull up this diagram right over here so that you can see those zones, just blown up for your convenience, as they are located on the live chart right over here, okay? These four areas. All right, so now let's go ahead and open up a multi-pane so that we can gauge that true bias for direction, okay? So just like always, we're going to go ahead and start off with our 30-minute immediate short-term time frame, and this is very much in accordance to what we were talking about in the first chart regarding the upside in the immediate short term, okay? So 30-minute immediate short term is now crossing above the 14-day simple moving average, which is the pink line. And the purple line is actually our RSI signal. Okay, so we have moved to the upside. We are in the right in the center of the bull weakness percentile, which means that the upside is still likely here. And remember, it's the 30 minutes, so this is likely to live out pretty fast. The 15-minute also shows that upside as well. Very similar setup to the 30 minutes. So yes, and I imagine this may be up to only the bi-hourly, as the bi-hourly is very weak in that pivot to the upside. So let's look at the hourly just in case, and the hourly is still showing us that upside, but please notice what we've been doing here. This is that limbo that we're talking about right now, okay? So we have been using the 14-day simple moving average as a form of support before a continuation on that sideways path, okay? So let's now go ahead and look at the bi-hourly, as it is suggesting a little bit of an upside, but please remember that it's very, very limited here. Okay, so the upside, I'm telling you, it's still I'm still giving it the I'm still giving the bias here to that 0258 range to about the 0266 range. Okay, so that's essentially what I'm looking for the coming session on Tuesday. Know that I'm not a financial advisor. Take whatever I do show and iterate within these videos as just a form of entertainment. Okay, you guys. So as I can't suggest for you to buy or sell any assets, I need you to do your own DD and everything will be just fine. All right, so now the 6-hour time frame is suggesting a rejection from that 14-day moving average and now, moving to the downside. But as you can see, as long as we do maintain ourselves within that gravitational zone, which could be about a 2% deficit from the trend line, which is about 60%. So 62 and 58% would essentially be those areas of gravitation. Okay, so in this case, we can face a pull right back up to the upside, but we do have that 14-day moving average above us, which can then push us right back in and then use that gravitational zone as support and then, continuing that sideways motion. Okay, so now the daily time frame is where it's essentially suggesting sideways motion all in all. Okay, a little bit bullish, slightly bullish, right? And slightly bearish. Now, why slightly bearish? Why? Because we're actually in that shallow area of the bull strength percentile, which can usually lead to a way down or a pull into the prior zone, right? But if we do get pulled into that prior zone, we have that 14-day moving average that can serve as that support for a continuation on. Okay, now this looks like it's kind of gonna be in limbo for a while, so let's just validate the upper time frames. Okay, so buy daily is suggesting that sideways trading. Okay, now 3-day is suggesting that sideways trading, slightly bullish. 5-day is suggesting a downside continuation, and the moving average suggesting sideways. So now let's see the weekly. Okay, so weekly is giving us an upside, and also the bi-weekly and even the monthly is giving us some upside. Yes, limited, but trust me when I say that the distance from this area here to this area here to the 14-day moving average is quite significant. Okay, so so this is likely not going to start making moves until possibly the end of the following week, even into the week after that. Okay, so I'm not talking about the following week as in the trading day after Martin Luther King. I'm talking about into the end of the next week. So after the week that's coming, at the end of that week, we could possibly see something start to kind of brew to the upside, and even potentially into the beginning of the following week after that one. Okay, so if there is something that you're catching here, it's probably a very early entry, and one of which we would actually have to eyeball and kind of finesse. Okay, so so these are the Crypstex ARC-Series indicators, and this essentially gives me that overall final bias towards the upside or downside. Okay, so particular to the hourly time frame. Well, first of all, this indicator is actually comprised of several exponential moving averages, all placed together very close in proximity, from a hyper fast exponential to a slightly slower snail pace exponential moving average. Okay, so what this does is that it gives us kind of a directional wave, right? So in these directional waves, we do get buy and sell signals, okay, based on those waves. Okay, they're all exponentials though, so which means is that they're following the price action very closely. Okay, so what we can see here is that we've actually gotten that long signal printed on, let's see, December 30th. So we have the short signal here, right? We actually wrote it all the way down to here, and now we're getting that long signal printed, and we have not printed a short signal yet. So this is still honoring the upside. Okay, so this is very likely. Let's go to the hourly. And let's see what it's got. Okay, so the last hourly print. Oh, there it is. There it is. Okay, so we have the print for that buy signal printed, which is right here. Sorry, it's right behind that green, this arrow, but this little square right there. So yeah, we're still suggesting that upside, and that long was actually printed on. This was actually just on Friday. So it's still so it's very much into. it's in correlation to what we're talking about for an immediate short-term upside, right? And then we can actually face a rejection. So definitely know that this is still has a lot to work on, right? But yeah, so if you feel compelled to reach out to me, I know it's taken me a little bit of time to reply to everybody, but I will try my best to get to you as soon as I can. So yeah, you guys, the links will be in the description below for you to consider joining the RCAP trading community. If you are interested in picking up these indicators, there are subscriptions that we are offering. Okay, so send me a DM, and we'll go ahead and go over those subscriptions and yeah, we can allow you to, I'm sorry, we can grant you the access into the private list upon you choosing what subscription package you'd like. All right, so yeah, with that said, I wish you well, very good rest of your day, and I will catch you at the bell on Tuesday. Adios.